Bases in accounting. There are three bases in accounting. First one is cash basis, second accrual basis, third one is hybrid basis. Hybrid basis is the mix of cash basis as well as accrual basis. In this video, we are going to discuss only about cash basis and accrual basis, right? So the main difference of cash basis and accrual basis is timing, right? Timing is the difference between cash basis and accrual basis. When you are going to record the transaction, that is timing, right? When you are going to record your transaction, that's the difference between cash and accrual. So timing is the difference between cash and accrual. Under cash basis, you are going to record your transaction when there is a cash movement, right? When there is a cash movement only, you are going to record your transaction. Either to record a transaction, either you should receive cash or you should pay cash. There should be a cash movements, right? In order to record an income in your book of accounts, you should have received your cash. Until you receive your cash, you are not going to record that income in your books of accounts, right? In order to record an expense in your books of account, you should have paid that cash. That cash should go out from your organization, right? To record an income, cash should come to your organization. To record an expense, cash should go from your organization. When there is a cash movement only, you will record the transaction, right? When there is no cash movement, no records, right? That is the cash basis. In this method, you are not going to consider credit transaction. In this method, you are not going to bother about credit transaction. That means you are not going to record your credit transaction, right? You will record only when there is cash movement. So under cash basis accounts, you can't see any account payable and receivable. Account receivable and account payable, there are no any account payable and account receivable under cash basis book of accounts, right? So whenever there is cash movement, you will record the transaction in your book of accounts. When there is no any cash movement take places, you won't record the transaction, right? Very simple, right? You will record income when you receive cash. You will record expense when you pay cash, right? On contrast to cash basis, right? In accrual basis, you will see when the transaction occurred actually, right? In the case of income, you will see when that income is earned actually, irrespective of thinking when that cash is received from your customers. You will see when that income is earned, right? When that sale happened actually, right? You won't bother about cash movement here, right? You are not going to consider cash movement. You will see when that income is happened, when this income is earned. In the case of expenses, when that expenses is incurred, right? Irrespective of thinking when that cash is paid in relation to that expense, you will think when that expense is incurred actually, when you are going to consume that services actually, right? You are not going to bother about when the cash is paid or when the cash is received. You will see when the transaction actually occurred in order to record on the accrual basis, right? Here you are not going to see whether that cash is received or not, whether that cash is paid or not. You will record whenever income is earned. In your book of account, you will pass double entry. Recording means passing double entry, right? You will record when the income is earned, not when the income is paid, right? expenses, you will record all your expenses when the expense is incurred, not when the expenses is paid. Right? You are not going to bother about cash movement. You will bother when the transaction happened. Right? Here you will think about cash movement. Right? When the cash movement take place is only you will record. So timing difference is the main difference. We'll see some examples. So I took a very simple example, that is electricity bill. Right? An organization is incurring electricity expenses in the month of January. Right? Consuming electricity service in the month of January. Right? The month of January month bill a company is receiving in the month of February. Electricity department people, electricity board people giving the bill to the organization, delivering the bill to the organization in the month of February. Right? However, the company made payment in the month of March. In the month of March, company is making payment. So we'll see how we are going to record this transaction under cash basis and accrual basis. Right? Under cash basis, you will see when you will bother about cash movement. Right? Under cash movement, you will see when the cash is actually paid. Right? The cash is actually paid in the month of March. This expense, electricity expense, is actually paid in the month of March. Right? So under cash basis, you will pass your double entry in the month of March. You will say cash credit, electricity expense debit. Right? You will pass your double entry in the month of March, not in the month of January. Right? For example, assume that electricity bill is 10,000. Right? You will pass double entry for 10,000 in the month of March, not in the month of January. When the cash is paid, you will pass double entry under cash basis. Right? Under cash basis, you will record in March. Right? So we'll see under accrual basis, it doesn't consider cash movement to record. Right? It doesn't consider cash movement to record. Under accrual basis, expense is recorded when that is incurred. Right? Actually, under cash basis, under accrual basis, you will see the electricity, which month electricity bill belong to. That electricity bill belong to the month of January. So that expense is incurred in the month of January. So you will pass double entry in the month of January. You will say electricity expenses debit 10,000, cash credit 10,000. Sorry, electricity payable 10,000. Right? You will pass double entry in the month of January by saying electricity expenses debit 10,000, account payable 10,000. Right? You will record in the month of January under accrual basis. Anyhow, under cash basis, you will record when payment is made, that is in the month of March. So you are going to record, anyhow you are going to record this 10,000, but timing is different. Right? Here you are recording January, here you are recording March. So timing difference. Anyhow you are going to record this 10,000. Right?